What's going on, guys? In this episode of Should I Invest, we're going to be talking about ENPH, diving deep into the financials to see if this is something that we are going to invest in the long term. Before I do that, go ahead and smash that like button, subscribe, and comment down below what stock you want me to look at next, and I'll do so on my next video. All right, so let's dive right in. As you can see, I have my MarketSmith tool. This tool helps me do research on stocks, provides me all the fund ownership, institutions, EPS growth, all that stuff is given to me in a close all-in-one software information. So you guys can download that software if you need as well. Link is in the description down below. All right, so with that said, let's go ahead and jump right in. I got my handy dandy Excel sheet that's going to help us decide whether it's a pass or fail, whether this is something I want to buy or not. And of course, we have Yahoo Finance to help us with a little bit of the financials and see if the numbers are adding up. All right, so first and foremost, let's go ahead and type in ENPH and let the sheet do its thing. So EPS is green, PE is on the red side. Let's see return on equity. To do that, we're going to go to MarketSmith. We're going to go to this box right here. We're going to see return on equity 103%. In fact, we're going to plug that in. Jeez, that's a big number. It's probably one of the biggest I've seen in this entire series. So 103% on ENPH. That is something significant there. All right, so now with that said, let's dive in and look at some of the financials, and we're going to look at return on equity. All right, so to see return on equity, we're going to come here. Oh, that ad is interesting. All right, return on equity. So we're going to look at total debt. To do that, we're going to come down here. We're going to go to, balance sheet. We're going to come down to total debt, which is total liabilities. We're going to take that right there, plug that here, and then we got total assets. We're going to take that, and we're going to plug it into the Excel sheet as well. All right, perfect. Now we're going to move over. We have our total debt to asset ratio of 1.37. That's perfect. Now let's look at the current debt to current asset. To do that, we're going to come down. We've got current liabilities. We're going to plug that right here. And then we got current assets. Boom. It's another positive figure right there, 3.55. So in the current term, the debts are not going to surpass the assets. In fact, we can pay off the debt at least 3.5 times. So that is something good to see as well. All right, next we're going to look at operating income. Let's go ahead and look at income statement and total operating income. This is where the problem lies, I think. All right, let's look at total revenue. All right, let's plug that in. 19%, actually pretty good. So this is a pass as well. We're getting pretty close to getting this thing to say a pass here. I think it really comes down to the cash flow and the fund ownership here in the last few categories. So let's go ahead and look at cash flow. 1.12192969. So this is also increasing. Boom, we got that pass. Let's go ahead and see what's going to happen when we adjust for all the other stuff. So now we want to look at owned by management. To do that, we're going to come right here. You can see also a big whopping 4% owned by management. That is something to make note of as well. You can see across the board steady. You have usually a 1. With the exception of NVIDIA and Uber, management has 4. And NVIDIA did really well recently. And now you have ENPH, which management has 4%. Now let's look at the funds. Are the funds increasing the position or decreasing? All right, to do that, we're going to come right here. And we have September 2021 right here. We have 1565, 17, 17, 19, 22, 25, 25. And slightly a drop here in June, but overall it seems to be something that has been moving upwards. All right, so we're going to go ahead and push this as an increase. I mean, at this point, whether this is a pass, increase or decrease, the Excel sheet is going to give us a pass for this, and it's just steady killed everything across the board. Return on equity 103% is something really significant that I haven't seen in this series. So let's look at what's happening here. So looking at the numbers here, 2017, the stock was about $1. It shot up to $330. in 2022. All right, and the high of 2022, which was December, it was 330 change. Okay, 320. Now, recently it's come down to 130. So let's take a look at the daily chart and see what's going on there. Recently it's pulled back quite a bit. So this is actually interesting because it's pulled back off of the highs quite a bit. It's coming down here, and it's at a nice area of support. All right, so if I was to say this is an area of support, right, you're coming right into that. All right, maybe the next area that you can try to look at buying or dollar costing average would be there, and then maybe right here would be your next area to kind of buy. So 140 possibly a starting position, dollar costing average as around 660 to 40, and then maybe 20 worst case scenario if it ever gets there. But the numbers look good. The Excel sheet sits as a pass, so definitely something I'm going to be looking into in the near future. All right, guys, if you guys did enjoy this video, make sure you comment, subscribe, like this video, and share it with as many people as you can. I would appreciate it, and it would help the YouTube channel grow. With that said, comment down below what stock you want me to do next, and I will be more than happy to do it for you. Thank you for watching, and we'll catch you next week right here on YouTube.